APR versus interest rate. So many people are like, what, how do you answer that? What is the APR? What's the interest rate? What's the difference? How does it affect one another?
The difference between interest rate and APR is, okay, the interest rate is what you pay back in interest to borrow the money. The APR incorporates the interest plus closing costs and extra fees that you incur to borrow at that rate. So if Movement Mortgage has an interest rate of 2.75 and their APR is 3%, so that's, you take that, but then you look at one of the local other banks or Quicken Loans or one of our competitors, and they're at 2.75, but their APR is 3.5%. That means that they're paying more money in closing costs, mortgage insurance, and fees to get to 2.75 than Movement Mortgage is offering 2.75. So very quickly, you can just compare APRs between banks and understand which one is charging them more in closing costs. And interest rate and closing costs have a direct marriage with each other. You can pay high closing costs and get a really low rate, or you can pay a high rate and pay really low costs. You can pay competitive costs and get a competitive rate. There's a whole different options when you're looking at who you're choosing to do business with. And it's important to look at the APR, because then you can decide, who's giving me the best rate, but who's giving me at the best cost as well. For the most basic nuts and bolts, 20% down, no points, very, very straightforward mortgage, your APR and your interest rate should almost match. They should be very, very close to being equal. Very slight differences because of just transactional fees that it takes to get the deal done. But there's other mortgages where you put low down payment down. You might pay points, and you might have very heavy mortgage insurance depending on the down payment amount and the buyer's profile. That APR would be drastically different than what the interest rate would be. And that's where you can get out of, loan officers who know this, they can charge high fees to get to the rate as long as the customer's happy with the rate.
Is there a cap that you can charge on APR as a bank?
Yeah, well, there's caps. It's called a high cost mortgage, and you can't charge fees just like out of the blue without getting some sort of benefit from it. So there is a cap, and mortgage companies that are self-policed will make sure that the customer doesn't see that on the back end. But still, we're talking big loan amounts, $300,000, $400,000, $500,000 loans. These were the prices what houses are going for these days. Points and fees can add up very, very quickly